Yesterday, the SPY did something very bullish. We closed above 639. So we had a very, very good candle on this gap down. Now on the 1 hour time frame, we do have a gap that is about to be filled at 645 or has to get filled at 645. So far, we are in the first base scenario that we called out, which was a bounce somewhere around 634 and coming all the way up to reclaim 640, 646. But it's not all sunshine and rainbows. We got JOLTS data today, and we are seeing a major warning in silver as well as gold at all-time highs, which is a hedge. Now, I'm going to warn you for what is to come next, and that is data that is released on Friday. You can see that right here. The employment situation is going to come out September 5th, 2025. So the JOLTS data today slipped to 7.2 million versus an expected 7.38 million. And then we have lots of hedging in gold and silver, with gold ripping past 3,500 an ounce. Now, the Fed is split. There's a split house right now. Some of them are saying we need multiple cuts, and some are saying only just a cut in September. Now, what this does mean is they are almost guaranteeing a cut in September. And that is the probability that we are seeing right now. More weakness equals a hard landing. The big employment situation report coming on Friday is what is next important for the market, and you can see I have that listed right here. Jobs report coming out weak is bullish, and I'll explain in a second. This is going to show non-farm payrolls, unemployment rate, wages, revisions, etc. for August, and is coming out this Friday. And if this is weak, it gives the Fed the reason to agree on a dovish stance for a September rate decision and cause a possible temporary pump in the markets. So weak print equals rate cuts and a temporary pump. However, stagflation risk cannot hold market gains. This is important for everybody trying to be a perma bull in the market. Markets will hold until it comes crumbling down. And the reason I'm not giving a second scenario is because this is the likely scenario that the report will come out weak. Now, too long didn't read. JOLTS job today, jobs opening was down. It was showing a cooling labor market, more evidence of that. And then we have hedges in gold and silver. So it's not sunshine and rainbows. People are still worried. And a Fed split decision, but basically guaranteeing a cut in September. And then we have that next print coming on Friday. And if it's weak, it means dovish coming into mid-September and a temporary pump before things run dry. And we can see that with the reverse repos damn near suffocating with no liquidity left to pump into the market. Now, I also want to warn you that the Fed stepping in has caused historically market crashes following. Now, I'm not stating that I am bullish on the market for a long term. This needs to be clear. Well, at least in the medium term, as in 2026. What's happening right now is a bad case, a bad scenario, and it's a more likely scenario in the medium term, which means we will see, in my opinion, I don't give financial advice, I'm not a financial advisor, and maybe I will be wrong, but we have more room to melt up. Now, that is not going to be some sort of squeeze up, but a melt up. To what levels? I don't know. Maybe at most 655. Right? But we have room to melt up through September before beginning a crash further. Now, Bitcoin also performing pretty well, up above 112K. We also called for a dip somewhere around 107.5, which is exactly where we dipped to and have been moving up ever since. We are not out of the woods just yet. I want to see this candle close and open above 112, and that will be very, very bullish for Bitcoin. Now, Alphabet stock, aka Google, soared over 5% after a judge ruled that the company will not have to sell Google Chrome. We need to talk about GameStop in a minute, but I just want to talk about Google absolutely ripping faces off, coming up to 231. We have resistance 231.60, 243.40, and then 260 on Google. It is currently up 9%. Beautiful, beautiful, beautiful play. Apple has also gapped higher and was above this trend line, which we haven't seen for quite a while on Apple. In fact, we haven't seen a move push towards this since June of last year. And if Apple breaks out, it could have a very similar move to Google. Now, jumping into GameStop, what do we see? we see a beautiful, beautiful green day yesterday with this big candle pop, which is exactly what we have been watching out for. And it just gives more evidence that we are exactly where we think we are. And it's days before a huge move higher. Again, all in my personal opinion. I don't give financial advice. We are also seeing a gamma ramp on GameStop that looks pretty well. We can see that GameStop came all the way up to 2340, which is a big level. We failed it so far today, but we should hopefully get a bounce around 23 and continue to climb higher coming into tomorrow as well as Friday. Now we see things don't get interesting until the $25 strike, meaning once GameStop closes the week at at or above $25, it should look good. That should carry us higher. That should carry us higher. And then $30, it gets even more interesting. And then following that gets even more interesting. So we will see a gamma ramp if we get above all of these zones right here out of these small zones. Now, why is this likely to happen at a very, very harsh rate? Well, here's an interesting release, and yes, this is legitimate from Yahoo Finance. GameStop is expected to report an 1,800% increase in EPS compared to last year. Now, that off rip sounds huge, but what we have to note is once a company turns around and gets out of negative territory or they don't have much earnings, this percentage of number can be very, very not inflated, but it can feel like they're about to blow faces off, which they are about to go green with, and they have zero debt. And this is a positive catalyst. And I do believe their earnings are going to be beautiful, but I just wanted to point that out. Japanese government bond yields, the 10-year running more green on the day, but this isn't where it gets fun. Look at the 30-year coming up to 3.28%, all-time highs. There's not much to say, right? The pressure that is going to be put on these swaps, and some FTDs have to be delivered based on FTD data that we're seeing sometime or around the earnings date of September 9th. It's going to be a fun month, right? It's going to be a fun month. As far as AMC goes, we are seeing a very, very hard move down right now. And so far, things are still aligning. I would give it right into GameStop earnings for both of these to move together. And speaking of short squeeze plays, Open is trying its hardest to get above that 525 level to 531 and hold above there, but volume is fading. Be very careful if you are trading Open. Rocket, RKT, another short squeeze play, trying its hardest to build a base right here, just filled a gap. So keep this one on your radar as well. Guys, let me know your thoughts in the comments down below on this market, on this shaky market. Are you bullish or bearish, or are you sitting off to the side collecting cash for a possible downturn that is going to be harsher than these minute corrections that we are seeing? Overall, that is what I got for you for today's video. If you have any questions, let me know in the comments down below. I will try to answer them and get to all the comments. Make sure to join my Discord server. It's the top link in the description of the video and also pinned in the top of the comments section. You guys will not regret it. Best vibes, best people, come in there. We have a ton of alerts as well. Again, that is the top link in the description for the Discord server or trading community. If you want a custom indicator that detects patterns and forecasts what the stock might do, that is the second link in the description. Overall, guys, that is it. I love you all. God bless. Lottery Stocks out.